Hey guys, this is Market Update. There's a lot of focus on the macro right now, so I'm going to show you this data, some potential changes and my opinions on that. Coming to the Bitcoin price first though, we just don't have a specific time-based narrative to latch onto. And we're in this malaise right now. We had the ETFs, the election, the crypto summit, all of that's been and gone, and there's no specific thing happening that we can latch onto to give us hope. And so if attention just ebbs and flows in and out of crypto, I think it can change prices by 25%. And so, we are in a almost 30% drawdown now. So this is typical for a bull market, but without a specific narrative that can give people hope to come in, and start, bidding prices, then, you're just going to get weak prices. And to be fair, the wider market, they want that to be soft right now. So we're just going to have to go through this. But this softness has to happen. It absolutely has to happen. Without it, you can't have the end or the rest of the bull market. You have to have this softness right now. It's imperative for the Treasury, the Fed, for this to happen. And so we have to go through this, but I think it's going to actually develop a healthier market overall. The issue with crypto prices right now, look, very, very weak. We're just falling through all of these support levels, and there's no hope. There's no thing on the horizon that we can latch onto to say that's what we're going to hope into and bid prices. And so, look, we're just going to have to go through a weak period. But there's a lot on the horizon in the macro that can change. This quarter, next quarter, difficult, but after that, things may change big time, because what they need to do, they need to refinance their debt, they need to get rates lower. They need that to happen. First, we have to go through actually that happening, which means weakness in markets. That's what we're seeing. But 28% drawdown, it's not the end of the world. If you trade crypto, get your deposit bonuses, and then you can actually trade when we start to climb out of this. So Bybit, $30,000 deposit bonus, and also Bybit's DEX. If you can't trade on Bybit, trade from your crypto wallet. You get a deposit bonus and a 10% permanent fee discount on there. Links below in the description. The policy out the Trump admin right now is extremely clear. They've told us in non-certain terms, we're not looking at the market, we're looking at rates. Don't look at the stock market. Interest rates need to come down. So let's unpack that and what it actually means. There's two parts to this policy that they have. The first one is they have a lot of debt to refinance this year, and they need the lowest rates possible. And they want rates lower. So how do you get rates lower? You have to create a slowdown in the economic data. GDP and inflation have to come soft. They have to come below consensus. And as long as they're soft, that will encourage buyers to come in and actually buy bonds, because they think that rates will come down. So they come and buy these bonds. Rates coming down means the bond price goes up. So they come in and buy. Bond prices go up a little bit. That creates lower rates. The government can sell into that, refinance, and sort that out short term. The longer term is the structural change in government spending and how the government runs, which is through Doge. Doge is actually creating some short-term shocks, which is actually pretty good for them as well. But the longer term is that the government just simply spends less, and you have more investment in the private sector, which is pretty good, and that will bring down rates on the long end, like the 10 and 30 year, which is still way too high for mortgages, etc. It's crippling that sector of the economy, and that's not great. So that structural change has to happen as well, but that's going to be a long thing throughout this term, for the midterms, etc. So there's that, but they have to have softness. You have to have softness in order to get rates down so they can start refinancing at lower rates. If we look at Goldman Sachs forecast here, this is for tomorrow, which is CPI. They believe it's going to be 2.87%, consensus 2.9. Again, pretty soft is actually pretty good news. They need softness. We need to go through softness. You cannot have just everything going up all the time. You have to have this softness because the government needs to refinance. They need softness right now. This is their GDP forecast as well, which you can see is cratering below forecasts. Again, this is actually pretty good news because they need softness to get rates on the low end higher, rates lower, bond prices up, so they can start refinancing and selling into that. It's actually good news. They need rates down. So that's what they're trying to do. So we have to go through this. Now, if we look at trueflation here, it's showing a big cratering of inflation, right, in the 1% range, right, 1.3. Now, not a perfect indicator, but it's showing that inflation is maybe not as high as everyone thinks, which again is a very good thing. We need inflation down, be soft, and rates can then come down. They can start to refinance around those rates, and then everyone can relax a little bit. But we have to short markets a bit. We do have to short markets. We have to get these rates down, as quick as possible. And once rates are down, the government can refinance. You can get through this blip, and then we can actually have the rest of the bull market. The issue that we all have right now is that we don't actually know how the data is going to turn out, right? So we need softness in the market. What does that mean? Does it mean just some softening and everything's fine? Or like usual, does it start to unravel, everyone panics, market drops a lot, and then the Fed reacts? Is that going to happen, or is it just going to actually be a slow and steady? So this is layoffs here. layoff announcements. These are challenger job cuts. So this is kind of leading a lot of the data that the Fed actually looks at. But you can see here there is a spike, right? Spike in layoffs. Now, again, are we having these spike in layoffs now? And have we priced a lot of this in? Or is this still not priced in by the market, right? So we don't know that. Is the market forward looking? We've come off from highs because of this. Or is the market still wrong-footed and this is going to get way worse? That is the uncertainty again, which leads to the panic and coming off of highs and bids disappearing. And so you have to live through this uncertainty. And the certainty is going to come essentially when the data comes in and when the Fed and Bessent and Trump start to change their rhetoric. But they're not doing that right now. So you can see the, essentially job data kind of spiking and saying, look, there's a softening right now, right? 4% short rate can drop a lot to buffer, right? Yes, it can. But it won't until the Fed actually changes it. And do they want more of a shock? So that's the thing. Like, how long is this going to happen and what levels? We don't know. We don't know what the Fed is going to do. They're still pretty tough on it because inflation is still too high. But as long as we see unemployment spiking a little bit or a lot, right? And so inflation, if it's coming softer, they will change their rhetoric at some point when they feel like the data is going to come in soft. But the lags here create volatility and uncertainty, which always comes in as soft prices. But I just think if you buy quality assets when prices are soft, you're going to do really well if you have a medium to long-term view. And so that's always where I am. It's clear at this point then that a lot of the economic data in the States is weak or coming weaker than expected. And that's actually a pretty good thing to set up the rest of the bull market. What we don't want is an unraveling. And the Fed isn't going to react to somewhat weak data. That's actually what they want and what the Treasury wants. Now, what they don't want is some sort of panic or financial catastrophe or contagion. That's when they step in. That's not happening right now. Weak markets, you have to go through that, which is a part of investing. Financial crashes, banking uncertainty and illiquidity, that's when the Fed's going to step in, and they'll step in really quick. They're monitoring everything. They did it with Silicon Valley Bank and all the others when that happened. They stepped in within the week. But a weak market with slightly low GDP, that's exactly what they want. They're not going to step in and save the market. That's not what they're here to do. They're here to make sure that the financial system doesn't collapse again. So White House economic advisor, trade policy uncertainty will be resolved by April. Q2 will take off after tax cuts. Don't believe this anyway, but you can see the lags in policy. You have weaker GDP, which is important through Doge and everything else, which they need. But then you have tax cuts, deregulation, etc., which is the structural side, which will be coming as well, throughout this administration, which could pump markets for sure. But we need weakness now. But the Fed are not going to step in. They're not going to cut rates just to pump markets. They need weakness right now. They want to refinance. Their job right now is refinancing, not pumping markets. So we have to go through this. When prices of strong assets are relatively weak, you have to buy them. If we put all of the macro together with what's happening geopolitically right now, there's a huge renegotiation of trade balances, trade deals, etc. between US, Europe, Russia, China, right? And so that's all going on, and there's a lot of brinksmanship and everything going on around that. China's in a massive deflationary spiral, so they need stimulus. They can't stimulate too much because their currency gets hit versus the dollar. There is a big negotiation happening around this right now and how much trade is going to be in each nation. And so that's happening. And after this is renegotiated, maybe you'll see some negotiations about China having to buy more US debt. That may actually increase demand for the debt, which pushes prices up and rates down. That lets the Treasury refinance a little bit. This is all going on. It's way too complex, obviously, for a video and, way above my pay grade, right? China's consumer prices are actually going into negative territory, right? So they need to stimulate. They need the US data to come softer, which the US is doing right now. And they're helping each other out, maybe you're negotiating. So all of this can actually come, right? If you look at interest rates here, Eurozone 2.5%, coming lower. It's just the US, it needs to come down lower, right? It does need to come lower, and they need some softness in the inflation and the GDP data, and that's what they're actually doing right now and going through. So this is potentially part of all the negotiation where trade deals and who buys the other one's debt gets negotiated. You can see M2 is still going higher though, right? So this is global money supply, still going higher, has a massive correlation to the Bitcoin price. So if we look through this is global M2, Bitcoin with a 10-week lag. It had come down. Bitcoin was staying high, maybe on hope and crypto meetings and everything. It's now followed. M2 is inflecting back up though, and so at some point Bitcoin will probably do that. Will it be around the negotiations and everything else in Europe? we have to wait and see, right? But that is really the big thing right now. And we're going through a huge negotiating phase, and we just have to go through it. And market's going to be pretty soft, I think, during that, but could very easily spike on trade deals and other negotiations and all the tariffs being used as a negotiating tactic. And then, suddenly it all happens within a week that they all get sorted out and markets go back to all-time highs. So, that's what we're going through right now. We just have to go through it. This is part of investing. If you do trade, Bybit deposit bonus down below, $30,000, link in description. If you can't trade on Bybit Apex, this is Bybit's DEX. Trade directly from your wallet. Permanent fee discount and deposit bonus for the link below as well. I'm James, this is ManagerG. Cheers for watching, and I'll see you in the next one.